So basically, new builds are exactly what they sound like. You know, you find vacant land or underutilized land, you demolish old structures if needed, and build a new building on it. Easy, right? So this is typically called infill development. So why new builds? I live in an extremely hot real estate market. Ottawa may be a very cold place to live in the winter, but our real estate sector has been scorching over the last few years. So what this means is that resale properties are expensive, and you have bidding war scenarios on almost all of them, and they sell within 24 hours. So it makes it very hard to compete. And as I've said before, as investors, we know that we make our money upfront when we buy. So overpaying is just not something I'm interested in. So a while back, we decided to do some new builds, and that way we control the location and price. So some quick pros and cons. And in terms of time, a con is that this takes a lot longer, obviously, than a typical resale transaction, because you have to acquire the land, you have to demolish, build, finance, refinance. So the whole life cycle of new build is a lot longer. That said, on the pro side, if you have a strong deal pipeline, then this longer time frame can be less of an issue. Moving on to money, con is you still require the typical 75 to 85% LTV for new builds. But on the pro side, you're able to control your income and costs a lot more. And we'll get into that in a minute. You may end up needing less money down depending on the outcome of the build and your net operating income. For experience, you need a lot more experience for new builds than you would for other types of deals like condo investing that I spoke about earlier, just because there are so many moving parts with a new construction. So you have to make sure your team is experienced for this. So some quick considerations, you know, just on that point, you have to have an experienced builder on your team, or you yourself have to have experience in the management of construction, because it's a much different, you know, expertise that you need for new build. Another thing is you have to become a zoning expert. You know, this means taking your local councillor and city planning official out for coffees or emailing them regularly. You need to know exactly what you can and can't do on the land before you lock it up. I know it's dry, but read over your local bylaws. And if you're doing your first new build, then partner with a consultant who has experience in city planning and zoning bylaws. For new builds, you're going to need construction loans, which are much different than traditional ones. So you have to work with an experienced broker on these types of real estate deals. A quick case study. We just went firm on 2 parcels of land side by side in Ottawa. One has a duplex on it, and the other is vacant land. They're zoned both to accommodate non-conforming fourplexes. The duplex on the one lot was occupied with tenants that were paying well below market rents, which, you know, that meant that the income wouldn't cover our carrying costs. So we actually negotiated with the seller to provide vacant possession so that we can rent them out later when we take possession at market rents. So a lesson there is don't walk away from a deal just because the rents are too low. You may have some ability to negotiate with the seller. So now we're actually rezoning the lots so that we can build a 6-plex on them. And we have estimates for our 6-plex build in the range of building costs for about 170, again, Canadian dollars per square foot. And then we have an NOI estimate of about $100,000. So using a conservative cap rate on that, we're looking at a future value of about 1.7 million. Because our cost to build is controlled, we're looking at a nice refinance scenario once a new build is complete and stabilized. And for those of you who don't know, stabilization period is just that time period, usually 6 to 12 months, where you get tenants in and expenses all on the books, so you know exactly what your net operating income is. So this is our new build strategy. We buy, build, refinance, and hold. And again, happy to answer any questions in the chat about this. So quickly, best practices, some things I've learned the hard way along the way. But again, that's how we learn, and that's why we're having this webinar. So make sure you know all the costs to build up front and have solid estimates. We've had a situation in the past where we missed actually a local building code requirement for separation walls, which once we found that out, it added about $80,000 to our build costs. So not great, but this is why you absolutely have to have someone on your team who has done this before. Another best practice is keep track of everything. So as investors, we should all be about processes and automation. And with new builds, there's a lot of efficiencies to be gained if you keep documenting everything you do as you move along through the process. And one final best practice that I've learned is find carryable assets. So what I mean by this is find your version of the duplex I noted above. If you can find parcels of land that you're going to develop on that have an existing structure on it that you could rent out while you're doing the development, that's going to dramatically improve your IRR and really help with your cash flows and reduce your risks.